Welcome to Max Capital Management Global Investment Community, GIC. What is GIC? Well, let's walk through it to understand it better. Part of our Corporate Social Responsibility, CSR, we found a global investment community on March 15, 2016. To give the community member the right knowledge about investing, be it whether you are about to invest now or later. Get ahead. Start in your investing education. A home filled with experienced investors that share their insights where you hardly find anywhere else. The main perks are inclusive, gaining the time and market-proven investment strategy, property investment life cycle and business investment life cycle. It is learning from the experienced community members in various industries, learning various proven investment strategies, learning what is risk management and recovery strategy, learning why diversification is different industry and market are so important, access to global projects and businesses on top of it, a great team to support you all the way along. Here are the three main moves how MCM GIC can help you. Education, seminars and workshops has what the late Kofi Annan said, knowledge is power. Seminars are one of the best ways to get proper insights from experts in the investing world. Seminars provide you access to these experts so you can get a shortcut on what to learn and what to be aware of. MCM GIC holds almost 150 seminars globally every year, exclusive to GIC members. These include workshops, networking and site visits to connect with other members and project owners. By being a part of GIC community, members get a chance to understand the industry from the inside out and make wise decisions. Project management. Since 2012, Max Capital Management has always been providing project management consultancy to GIC members in the community with clarity. Members can easily do their project from a transparent perspective, which is reassuring. This includes investment vehicle, legal structures, tax and other aspects related to risk. On another hand, caters to wide-ranging project due diligence performance from sourcing, management, existing. Sharing ecosystem to help GIC members with their investing journey. As they learn, MCM GIC has sharing economy to help maximum usage of resources. Max Capital Management has realized that there are inefficiencies in the market and sometimes things can get unstable. Individuals may not be able to access to the right resources and resources may not be efficiently used. This is where the ecosystem comes in. Partners get connected with resources and members get maximum value being in the system. It always feels homely and safe to be part of the community because sometimes there are always hidden stories that people talk about. This factor can affect and even prevent people from making the decision they want mainly because they may not align with the investing profile and what they really are looking for. To help you more, you may also learn inside experience from investors who love to get their hand on being part of. The MCM GIC can give you access to such insights. Join the community today. Our help desk ready to serve you. If you are looking to join a knowledge-driven investment community, to learn solid investment knowledge with other like-minded investors, property investment life cycle, business investment life cycle, market industry outlook, insightful business innovation, global investment strategies, tax and legal related matters. Now you can access all this investment knowledge through our global investment seminars. Do like our Facebook page to find out more about our seminars. Our help desk ready to serve you.
Now we have done this property investment life cycle. Hope you guys learn a lot. And now we are moving into this business investment life cycle. Okay, so business investment life cycle, if you guys can see, right? Okay, like human, like I said just now, like a property, business also have this cycle. All right. So from startup means you just started, okay, just got born, right? And then you start to grow. Once you're growing already, you want to expand further, faster. And then once you are expand already, you're mature. Okay, mature is not the end. It's actually also is another phase of growth. I'll explain to you later. Let us go to one by one. Okay, so the first stage, startup. Okay, the first stage in business where idea turn into action. Okay, so now you think you want to open this particular cafe or particular business or F&B business and whatnot. So there is the idea stage where you actually have this idea and then you are actually looking for resources, right? So looking into resources, putting all of them together. Okay, and then normally startups. Okay, sometimes you can be a very good cook, right? So you become a very good cook and then you want to start the F&B business. But being an F&B as a cook, right, you also need to worry about this financing. You also need to worry about this helpers and whatnot, right? That's why if you can see here, the first thing is actually startup often requires smart money. Okay, where investor also contribute in the building the business by sharing their expertise, resources, connection, and whatnot. So in the startup businesses, normally they, let's say, for example, in a tech company, you might be very good in tech, but you also need people to do HR, you need people to do finance, you need people to do purchasing and whatnot, right? So we need not only the money in the beginning stage of the business, not only the money, they need people to also share their resources and also expertise for the business to actually even start. Okay, and then there has the highest potential of gain and also risk. People always say this stage, right, is high risk, high returns. Okay, why? Because it's just going to fruit from a seed, right? It's just going to start, right? So very likely, normally, okay, the business might not happen. Okay, but this in this stage, right, the due diligence is normally will be focused on the founder and the scalability of the business to give the highest return to the investors due to less track record to prove the business profitability. All right. So normally, it's if let's say you want to start to do this particular business, okay, and normally why we normally study the founder is because we want to see whether his idea, whether he can actually make his idea into a real thing or not, whether he can fulfill whatever he wanted to do or not. Okay, so we have to see whether he got any track record building businesses before or not, whether he have failed into any businesses or not, or whether he have any expertise in this particular business that he want to build or not. Okay, so we normally do more due diligence on the founder. Okay, and to see whether he can build the business. Then only we can actually give him the money to trust him and also share our expertise with them for them to start doing the business. Okay, after to do the startup, normally, okay, the first outlet, for example, is already done. Okay, so basically you guys can see the business is already operating and the business is already creating tractions. What does that mean is the outlet is already open and they are already start selling. Okay, they want already open. In this stage, right, business already implementing all their plan, and usually in retail business, it will be the first branch running and troubleshooting the weakness and improving the business model. Okay, as the business grows, the risk is getting lesser as the investor have more data to do due diligence and predict the success of the business. Okay, so in this stage, right, so for example, they see this particular menu is not nice, okay, a lot of people are not eating, so they can change a little bit on the menu, or they can see this promotion is not so good, so they change a little bit on the promotion. Okay, so and as time goes, right, you also can see whether how many people are actually buying the idea that he's selling, the product that he's selling. Okay, so we guys can see we can actually do the due diligence a little bit. There is a little bit of fractions, all right, and then stage 2 also, if you guys can see, in this growing business, the business might not need as much resources from the investors, but more money, right, to fuel the business, to support the business for the next stage. Okay, so in this stage, they start to need more money than the expertise already. Okay, and then we go to the expansion. For example, this particular business already do all these tweakings, already do a little bit changes here and there, and now the business is doing very well. Okay, and now, for example, they already opened in Samni Pyramid. Samni Pyramid is doing very well. Now they have to go into different malls. Okay, so what are the best malls in Klang Valley? So like One U, Mid Valley, and whatnot. So they want to open one location is doing very well. They want to scale up, and this is the stage that need the biggest fund. Okay, they need a big fund for them to scale up fast. Okay, so in this stage, business need more funds to grow rapidly in terms of new location and acquiring more customers database. Growing rapidly requires bigger fund, and businesses will have to look for institution to keep fueling the business with enough fund. Okay, if like now, right in this stage, right, friends and family might not be able to fund millions. Okay, so they have to go into institutional level already. For example, equity crowdfunding platform, for example, investors, like this high net worth investors and whatnot, to actually start funding them for them to grow faster. Okay, so let's go for the last stage here, the mature stage. Okay, the business basically already succeed in expanding nationwide or globally and don't have much room to grow already. All the best mall is already taken. Now the business can plan to find new avenues to continue growing. For example, I give you an example. For example, this particular restaurant is doing very well selling chicken rice. Okay, and then once they're already mature, now they can actually supply chicken to their chicken rice shops. All right, it's a different avenue, but they can immediately grow very big because their own chain need a lot of chicken. Okay, that's an example. So they can actually go into different segments, but within their ecosystem. Okay, and also you guys can see in the market, we also can see this super app, for example, in the market, Grab, right? First they start as a ride hailing. Now we have this e-payment as well. Okay, the e-wallet and whatnot. So they also can go into different avenue so that the business can further grow. Okay, so basically in this stage as well, the risk is fairly low compared to the other earlier stages, but the gain might not be as high. Okay, because earlier high risk, high return, right? So now it's low risk but fairly high return. Okay, however, once the company get listed in the public market, the business might unlock a higher valuation of the business, thus make both investor and the founder make higher return. Okay, when you go to the public market, the public might willing to pay more for the same businesses. All right. Okay, in this stage as well, the business can choose to further expand the business globally or to start a different business completely, like I said just now, with the existing resources and the fund they might raise from the public listing process. So the business can further grow and increase the revenue. Okay, so bigger institutions will be more keen to invest in this kind of company as the tractions are clear and they have track record to show. Okay, so now we know the founder really can do a good job. Okay, building businesses and whatnot. And big companies normally they're willing to come in to buy the listed company stock or right before they go listing. Okay, so the bigger institution normally they have this auditor report for 3 years and everything. They go into very detail and everything, and then only they will put in their money. In very early stage, normally this institutional will be a little bit reluctant to come in because there's not so much of traction and also higher risk, right? Okay, so this is our testimony, like I show in PILC just now. This is our business investment life cycle testimonial. If you guys can notice something here, right? All these are still in private stage. Okay, so there are a few businesses we invested not only in Malaysia. You guys can see there are some in Australia, in Singapore, in India, in Germany, in Hong Kong, and whatnot. So we actually invest into different stages. We also invest globally. And if you guys notice again just now, it's all in private stage. Why we want to invest in private companies? This is the answer. You guys can see nowadays companies are staying private longer. All right, there is companies, we call them unicorn right now. Okay, unicorn means they are valued at 1 billion USD, but they are still private. They haven't go listing yet. All right, there are more and more companies are being private companies, but they value more than 1 billion. So, and these companies are growing very fast. Do we want to lose opportunity or not? That's why we in MCM, right, we choose the right company, we invest them in the early stage, and we do the proper due diligence, choosing the right company together, right? And then we can actually get the highest return. Okay, and then this is a little bit tips before I end the presentation, a little bit of tips on what kind of due diligence that you as an individual can do, how to invest into a company. All right, so a few things. First thing is who, the key person in the company registration. All right, normally you guys can see I will be a spokesperson of this particular company. They'll come out and talk. But when we go and see the SSM or the company record, the person name is not there. Okay, these are the things that we normally look at. And then, is it Googleable? Googleable means what? We go and check their profile at LinkedIn. Do they have the background check or not? What kind of track record of them building companies? And what is their vision, character of the founder? Okay, and then the key management team. Okay, sometimes it's not only the founder. We also have to see the other key management team, whether they are qualified, or whether they can build the company to a bigger level or not. Okay, and then how many years experience, and also auditor report, and any reputable person or institutional involved. What does this mean? For example, if this company is fairly young, but a big institutional company actually investing in them. Okay, for example, like Grab investing in them, or maybe SoftBank investing in them, or maybe Khazanah investing in them. The company is still small, but a lot of these big institutional coming and invest in them. So we can actually write on this big institutional due diligence. Okay, that is what it means. Okay, and second one is what. Okay, what is the business model? Today we have looking at sunset and or a sunrise industry. Today, if somebody says, I want to come and sell a fax machine, so is it a sunrise or sunset business? Okay, or another person come and say, I'm going to do a DNA technology business, or maybe a AI technology business, or maybe e-wallet or e-money business and whatnot. So we can see whether it's a sunrise or sunset industry, okay, by our understanding. Another thing, this is the second one actually, is very, very important that normally we also follow, whether is it sustainable or not. Okay, some companies, some businesses might need too much of fund for them to grow, but it might not be sustainable in the long term. Another thing is scalability. Sometimes some of the businesses might need too much of money into the business operation, and they don't have enough money for them to do for marketing and whatnot. Or maybe they're too heavy on asset, so they're a little bit slow for them to build. Okay, and the third one is social responsible. Okay, socially responsible means we want to make money, but then we want to make money responsibly. All right, means we want to invest into businesses that actually have an impact on the public, and actually bring more good into the public. Okay, and then the risk and reward. Okay, you guys can also say high risk, high reward, right? Sometimes, right, we can go and look for those projects with high reward, and then later we go and negotiate the risk further. Okay, also can be done. And also the tax part of it, whether it's a highly taxable business or not, and whatnot, whether it's suitable for us to invest, is it worth taking the risk or not, and whatnot. Okay, and where is the existing business operation? Okay, whether is it too far away from us, or is it in our place? Okay, when is the place in the business is near to us, we also can monitor. We also have the better understanding on how the business goes as well. And another thing is the when. Okay, when is the exit? Whether the exit plan justifiable or not. Because some people are willing to give higher return, but the exit is late. Okay, for example, I can give you 20% or 30% per annum return, for example, but you need to wait for 20 years or 10 years. It might not be justifiable for us. All right, so we actually can manage the exit, make sure we are getting the right exit plan for us. Okay, because for young people, a little bit longer exit is fine. But for people who are more than 40, 50 years old, a longer exit might not be suitable for them. Okay, so we have to do our own due diligence to be able to know whether it's suitable for us or not. Okay, and then the last one is the how. Okay, how the capital is actually injected. Okay, so basically today a company can go around, look for funds. Okay, and sometimes they might need the fund to pay off the debts. Okay, so when we pay off debts, whether the paying off debt will help the company to grow or not, or they might need money to do more marketing, or maybe they need money to pay salaries, or maybe they need money to buy more machines, or maybe more transport and whatnot. So we have to see whether the capital injected really can help the business or not. Okay, so I hope you guys learned a little bit from this sharing from us. Okay, and I hope you guys are learning. And I really hope to see you guys soon in our presentation. And thank you very much. Okay, anyway, hope you guys stay safe at home and take care. See you guys soon.